Hi everyone, welcome back to the FAR classes. This is in part 3 of series of Accounting Standard Codification 606. In this video, I'll be walking you through in detail step 2, that is identification of performance obligation in a contract. So let's dive into to understand more in detail.
Now in today's class, we'll target to finish second step and third step, and if time allows, we'll try to cover the fourth step also, because tomorrow after the fifth step, even after the fifth step also, we have certain small topics which we'll be covering. So today and tomorrow class, we'll be finishing off ASC 606 in complete form, and we'll be doing certain practice as and when we go along with the respective steps, similarly how we are doing in each class, right? And then if time allows, we'll do some question in the learning management software also, right? So now let's jump into identification of performance obligation in the contract, right? In this, today we'll be covering distinct goods and services, whether the goods and services are being capable of being distinct or not. We'll be understanding that, and how the goods and services, or when the goods and services are considered to be separately identifiable. And then last important thing in step 2 is the material right. That also will be covering. So let's dive into. So this all, hope you remember, we covered. We have done all these three questions also. So now step 2, identify the performance obligation in a contract. What is a performance obligation? Do you guys remember? What is a performance obligation in a contract?
It's a deliverable.
Yeah. So for example, you have paid tuition fees to me. So what is my performance obligation? To deliver the lectures, right? Isn't it? Yes, no?
Yes.
Yes, sir. And what, like if you look at the definition here, a performance obligation is actually a promise in a contract with a customer to transfer to the customer either the goods or services, or bundle of goods or services that are distinct, or a series of distinct goods and services that are substantially the same and that have the same pattern to transfer to the customer. So here, if you see, like I highlighted few things. One is like promise. What is the performance obligation? Is actually a promise from one side to another side, one party of the contract to another party of the contract. For example, if you entered into a contract with the contractor to construct your house, right? And you'll be making the payment on a milestone basis, which you guys have agreed, right? Let's assume you have like 250 square yard piece of land, and you entered into an agreement with the contractor to build a stilt plus 4-story building on that, right? And then you agree, as and when you build the stilt, you'll pay him, like, let's assume 40 lakh rupees, or you can say let's assume $50,000, and then on each floor you'll be paying them $100,000. Let's assume that, right? So total contract is, let's say, $450,000, and $50,000 you'll be paying them at the time of making the silt, and $100,000 on each floor. Let's assume that's your agreement between both of your parties. So what is the contractor obligations here?
Sir, each floor and the stilt is a performance obligation. Each would be individually seen upon, and revenue would be recognized when each of it has been delivered. Like for if stilt has been constructed, $50,000 would be recognized, and so for each floor.
Yeah, absolutely right. So here the contractor performance obligation is to make the respective stories and recognize the revenue accordingly, right? And here, if you see, along with this, if you entered into a contract that the contractor need to do interior designing of all the 4th floor also, right? Here, if you see, you have entered into one contract or probably a 2 contract, right? But you have negotiated both the contracts with the same party at the same time or near about the same time. And then let's assume you have given $20,000 contract for interior designing also. Let's assume $5,000 for each floor. So this $20,000 would be combined with the main contract because it is being negotiated together with the same party, or maybe about the near about the time, right? So hence this contract can be combined together, and here the performance obligation of the contractor will increase by 5,000 for each floor completing the interior designing, right? So here if you look at the second line, either the goods and services or bundle of goods and services. Here the contractor need to provide bundle of goods and services, right? That is or are distinct or a series of goods and services. We'll come to the series, that's altogether a different concept. So first let's understand supply of goods and services. Second, what is bundle? For example, if you gone to, let's say, the HP store, right? And if you want to buy an HP laptop, right? So along with the HP laptop, they are giving you backpack, they give you antivirus, right? And then they give you like mouse and screen guard, right? So all these 5-6 items, they have bundled it together and given you, let's say, $200 discount. For example, HP laptop value is $1,000, right? Let's do it here. So laptop, one second. Laptop, let's assume $1,000. In addition to that, you got what do you call office. That is, let's assume $80. You got antivirus. Let's assume $70. You got backpack. Let's assume $50. And you got screen guard. Let's assume $50. How much is the total value? 250, 1250. So this is the dollar value, and they have given you discount of, let's say, $200, and the net pricing is $1050, right? So here this 1050 is for all these 5 products, right? So if you are paying 1050 to the HP dealer, so he or she will be giving you all these 5 items together, right? So that is called bundle sale. Make sense? Make sense? What is bundle sale?
Yes, sir.
Yeah, just remember this numbers will be keeping same example in future discussion also. Just keep in mind these numbers. Good. Now another concept I have mentioned over here that may be new for you is a distinct goods and series of distinct goods and services. Series of distinct goods and services, like same kind of goods and services but over the period of time. For example, you get the milk every day from milkman, right? So what he is doing every day, he is giving you milk, and then at the month end you are paying him, right? So another example, if you see, most of you are working professional, right?
Sir,
You have IT team in your office.
Yes, sir. Actually, I have a good example of this. My organization recognizes revenue on basis of series of distinct goods and services.
Yes, go ahead.
In my organization, what actually happens is we provide services for on monthly basis or annual basis, like we like a telecom industry.
Yes.
So we recognize revenue each day, considering each day we are providing distinct services and we amortize any credit that we give to the customer over the term of the contract, and that constitutes distinct service over a period of 3 years, 4 years, depending on the contract.
Yeah. But first explain what exactly goods and services your company provides so that everyone can
Yes.
correlate.
So basically, we provide like a software. My organization is Ring Central. It's basically like Microsoft Teams, and we provide digital lines and contact center services to our customers. So it's like we have agreed to provide 1,000 digital lines to a customer, and it would be these thousands would be used over a period of 3 years. Now, if let's suppose agreed contract value is total contract value is $1 million, we will recognize $1 million over 3 years.
Absolutely true.
So
Yeah.
that's
Yeah, very good example, Ayush, and a very practical example. So I'm sure some of you might have got it, some of you not. So let me explain it further what Ayush says and help you understand with the similar.
सर
सर
आयुष
वो
को नहीं आता
बुरा मान गया सर, वो कह रहा है आकर्षू में सारा रेवेन्यू पे करके देता हूँ और साले तेरा नाम आ जाता है.
Okay, Akash, sorry. Sorry. So, like what Akash is saying, like their company is providing, distinct goods and services, but over the period of time to their customer. For example, like all of you are like working professional, most of you are, right? So you may have like IT team in your office. Yeah.
Yes,
Prashant, right? So if you see, like in some of your organization, you may have in-house IT team, or some of the company outsource the IT team, right? They give it outsourced to TCS, Infosys, Wipro, or many such companies, right? And like if you look at from the IT team side, what kind of goods and services they are providing? They are providing all kind of IT services, whether it will be laptop issues, it may be window issue, it may be network issue, it may be internet issue, or any such kind of issue, any problem as and when come to any of the employees system or the network, they go and reach out to the IT team, and then IT team provide the support and assistance, right? So there they do not know like what kind of goods and services they might be providing, but their contracts are generally for the period, right? In that, for each time they will be providing distinct goods and services, but they are providing over the period of time consistently, right? That is called series of distinct goods and services. But the nature of goods and services are, if you see, is the IT services, right? So if you club together, whether they are doing hardware fixing, whether they are doing software fixing, whether they are doing network fixing, whether they are doing any other problem resolving, authorization, access control, but all these things come under the same umbrella as the IT support services, right? Another example, if I say, like in your office, you may have like you can say this facilities management team. So for example, if you have an office in any corporate building, so there would be a facility management team who will be providing the service like cleaning, plumbing, electrician to your building, right? Which is very much common to everyone, but there would be separate third party who will be providing facilities management services, right? So even though they are providing plumbing service, cleaning service, mechanical service, or you can say network services, or maybe they provide electrician services, all combined together is helping you to use their facilities the way it should be, right? So hence, whether they are providing plumbing service, electrician services, cleaning services, they all come under the same umbrella as a facility management services, and those services are being provided to the consumer over the period of time, but depend on the need as an for the respective item, they provide the respective goods and services. That is called distinct goods and services. So we'll be discussing more in detail, but high level, if you see from all the three examples which Akash has shared, one example about his company, like they are providing, similar to Microsoft network lines to their customers, right? And those could be, like they are providing, let's say 1000 line, which like Akash has shared to a customer. So customer might be using 100 in a day, sometime 500, sometime 800, sometime maybe at full capacity of 1000, right? But as a distributor, they are providing 1000 lines at a time. It's on consumer how many and how much he or she wants to consume, right? But they are providing these goods and services to over the period of time as per the contract, right? So that is called series of distinct goods and services that are substantially same. Goods and services are same, but like usage are different at different point of time, and the volume is different at different point of time, right? That is the major difference. Make sense? What is distinct goods and services?
सर लेकिन इसमें जो लिख रहे हैं डिस्टिंक्ट लिख रहे हैं वर्ड, जैसे डिस्टिंक्ट गुड और सर्विस, तो गुड्स और सर्विस तो जैसे सेम ही है ना सर जो प्रोवाइड कर रहे हैं, तो उसको क्यों डिस्टिंक्ट बोल रहे हैं?
So we are coming to that. What is the definition of distinct and why it is called distinct?
Okay.
When you purchase one pen from me,
Okay.
that pen is a distinct good, right? And every day you come and purchase one pen from me, so I'm giving you every day one new pen, one distinct pen.
Okay.
Same way, every day when you are providing the service to them, so every day it's count. That's the reason you are recognizing the revenue on a daily basis.
Okay. Okay.
Hmm.
Okay.
Everyone agree, or any confusion, or anything you need more clarification?
No sir, clear.
Okay, so one second. So next line, if you see, performance obligation is satisfied and revenue is recognized when the customer obtain the control of goods and services. This is similar to AS 605, and same as in India you might have studied accounting standard 9 and now Ind AS 116, right? So it's very much similar. As and when goods are being transferred and the possession of those goods and services or control of those goods and services is being transferred, that assume that performance obligation is satisfied. But this we'll be learning more in detail along with fifth step, which is recognition of revenue as and when performance obligation is satisfied. But when performance obligation is satisfied, that will be understanding in step 2, right? When performance obligation is being satisfied, when goods and services are being transferred to the consumer, and the consumer is obtaining the control over those goods and services. At that point of time, it is considered that goods and services has been transferred and performance obligation has been satisfied from the seller toward the buyer. For example, if you go to the McDonald's and you order, let's say, McVeggie meal, as and when McVeggie meal is being provided to you, their obligation is done, right? Same way, when you have made the payment, so your obligation is done, but their obligation to provide you McVeggie meal is pending. As and when they provide you McVeggie meal, their performance obligation is also satisfied, and then they can recognize the revenue. Make sense?
Yes sir.
Yes, sir.
So now thing is that control is defined as ability to direct the use of and obtain substantially all of the remaining benefit from assets. Second is prevent other entity from directing the use of obtaining the benefit from the assets. So here, if you see, three major things here. One is, for example, you have purchased a laptop, right? Now you have a right to use it, right? Yes, no?
Yes sir.
So if you see, first point, direct the use. That means, for example, as a KC Global company, I purchase a laptop and I have given to one of my staff, right? So I have purchased the laptop. That means I got the ownership, and now I have a right to direct the use of that laptop, right? Then I can give it to my staff that you can use it. So I have a right to use as well as I have a right to direct the use also. That means I can delegate the usage right to someone else. So I have that authority, right? Direct to use of and obtain substantially all the remaining benefit of the asset. That means for rest of the life of the assets, I can utilize that. First thing is that. Second thing is prevent other entities from directing the use. For example, if I purchase the laptop from the HP store, now HP store owner cannot give that laptop to anyone else, right? That has been earmarked to me even though I have not taken the delivery, right? Or if I have already purchased and taken the delivery, then he cannot direct, right? He do not have the right to direct or authorize anyone to use that laptop. Make sense? So when you have ability to direct the use and take the benefit of remaining life of the asset, or you have the right to prevent anyone else using it, then it is being considered that you have control over that asset. Make sense?
Yes, sir.
So let's look at example. Consignor in consignment sale or principle of sales agent. So if you see like consignor, I'm sure you might have studied in school days. What is consignor, consignee? Any idea?
हाँ सर, कंसाइनमेंट अकाउंटिंग.
क्या होता है? What is consignor or what is consignee?
सर कंसाइनर हो गया जिसने गुड्स कंसाइन करे, मतलब किसी को भेजे
For
और
further
फॉर फर्दर सेलिंग, और कंसाइनी इज द पर्सन जिसके पास गुड्स रिसीव हुए.
So similar to like courier agencies or you can say transportation company, they all are consignee, where you as a company provide your goods to the courier agency, to transport agency, to railway transfer, to airline transfer, right? To ship their goods from one place to another place, right? Second concept, I'm sure you may have some idea about principal and agent. Do you guys remember that?
Yes, sir.
What is principal? What is agent?
The principal is the person who has actually the right to the goods, and then he is selling through an agent his goods, and he sets a commission with the agent and all that.
Yes, yes. So what is Amazon?
एजेंट है सर.
एजेंट ही हो गया एक तरह से, बट
कुछ केसेस में वो प्रिंसिपल भी है
जहाँ पे उसका खुद का
ब्रांड है.
No, Flipkart only hold the inventory of their own. If you see in the market space, Amazon, I don't think so. They have their own inventory.
सर उसका कभी कभी अगर आप देखोगे ना अमेजोन की साइट पे, इनकी पेरेंट क्लाउड टेल करके है एक, तो वो उसका डायरेक्ट सेलर वो आ रहा होता है क्लाउड. यस, तो उस केस में दे हैव देयर वेयर हाउसेस.
Okay.
That
Yeah. So you got it right. Principally, so principal is the owner of the goods who hold the inventory risk and credit risk, right? Whereas the agent neither hold inventory risk nor hold credit risk, and nor he has authority to decide the pricing, right? So agent generally get the commission. So here the objective of putting this consignee and agent example, because they are not the owner, they do not hold the control. They have the possession of the goods or services, but they are not the owner. They do not hold the control, right? Make sense?
Yes, sir.
So note over here is promise can be explicit or implicit. So both are, like we discussed earlier also. So promise to provide the goods and services or to make the payment, it can be either in written, oral, right? Or for example, it can be explicitly mentioned as FOB shipping, FOB destination, right? I'm sure on some of the invoices you might have seen, right? Or it can be implicit. Implicit mean like customary practice, or you can say industry practice or business practice. For example, if you are purchasing anything from Amazon, it's implied that delivery will come to your home, right? Isn't it?
Yes, sir.
So same way, there are so many industry practice or customary practice that can be considered as implied, right? So promise can be explicit or it can be implied. So both are being considered as a performance obligation. Now coming to distinct goods and service for which we were discussing. Goods and services are considered to be distinct if it is both. So if it is meeting both the condition. First one is capable of being distinct and second is separately identifiable. So when a good or service is called capable of being distinct, if it can be used on its own or in combination with other goods and services, then it's called capable of being distinct. For example, let's assume the tire of, let's say, a bike or maybe of a car, right? So that is of, let's say, a car tire of the rim size 70. So rim size 17 car, it can be Hyundai, it can be Maruti, it can be Tata, it can be BMW, right? The tire can be fit into any kind of car, right? If you go to any, let's assume you have any car and you wanted to replace the tire, and that company where you are going to dealer, they may have like tire of your car's rim size, right? And that rim size are generally very much standard for all the car manufacturer, so that it will be after the sale, it will be easier for the consumer to find the respective tires, right? Here if you see, the tire is capable of being distinct and it can be used either in Hyundai or in Maruti or in Tata or in BMW or in Tesla or any other car who is having the same rim size, right? So then this tire can be considered as capable of being distinct, right? Second, if you see, separately identifiable. So each obligation can be considered distinct in terms of the contract if they are separately identifiable. That means each tire you can separately identify, right? So the tire is capable of being distinct. It can be used in any car or into the different category of car. It can be used at its own, or it can be used along with you say, let's assume in a tire you are fixing cap of the tire, or maybe you are fixing the rim along with the tire. So right along with the rim also, for example, if it is tubeless tire, right? What do you call? Sorry, what do you call to the rim? Alloy rims. Sorry. So the tire can be fixed into the alloy rim and it can be fixed into the normal rim also, right? So hence it is being clearly shows like it is being capable of being distinct and it can be separately identifiable. Hence the good would be considered as distinct goods and services. Same way, if you see, here is the pen. So in the pen, you can sell the pen as it is, or you can remove the refill and sell the refill separately. So refill here would be considered as a separate, capable of being distinct and separately identifiable, right? Whereas you cannot sell only the cover, right? Unless you're selling the cover to the pen manufacturer or assembler of the pen, right? So for example, if you see here also we have mentioned example, purchase of machinery and installation services. So if you are purchasing any big machinery which require installation services, so here both the things are, you can say, distinct goods and services. Both are capable of being distinct and separately identifiable. For example, let's say you are planning to set up a manufacturing setup and there you want to install a bigger machinery. Let's say mold machine. Have you ever heard about molding machine? Or shall I show you what exactly is molding machine is? then maybe can correlate. Can you see this? Hello?
Yes, sir.
Yes, sir.
So if you I click on this, we'll see this is a molding machine. We got to India Mart. So, one second. You see here. So this one. Can you see this screen? This molding machine, which is tire mold.
Yes, sir.
On the left hand
Yes,
side, right? This is called a molding machine, in which you put rubber and all those chemicals, and it heating up and like accelerate the air, and that's how like tire are being made, right? Let's assume you are a tire manufacturing company and you want to set up this molding machine, right? First thing is you'll be purchasing this machine, and second thing is the installation part of it. For installation of such machine, you need to build a platform which is go underground, and some part of it comes over the ground, but like 30% or 40% of the part will go into the underground to setting up this machine, right? So you require a specific installation for it, right? So here both the things, both like good is one thing and the service, installation service is another thing, and they both are separate and distinct. The company might be providing installation services for like any other you can say mold provider, and they also provide their own mold. For them, there are two, you can say, revenue stream. One is sale of the product, second is installation services of the product. Make sense?
Yes, sir.
Okay, let's come back to the notes here. So another example is laptop and antivirus. So they both are distinct because antivirus can be sold independently, right? And can be combined along with the laptop deal, which is example we have discussed in the first half, right? Second is car and extended warranty. So extended warranty also can be sold independently, right? And it can be sold along with the sale of the car. But if you see extended warranty, it is being capable of being distinct, and it can be separately identifiable performance obligation. So that is called listing goods and services, when two goods and services are separately identifiable and capable of being distinct. Make sense?
Sir, I have a question.
Yes,
इसमें
please.
इसमें लिखा है separately identifiable के आगे each obligation can be considered distinct in terms of the contract. So something which is distinct can be identifiable, separately identifiable, and cannot be separately identifiable as well. But it has to be under the contract. No.
Sorry, I didn't got your question.
तो जैसे जो separately identifiable है उसमें जो लास्ट के लिखा है in terms of the contract, तो मतलब हम ये बेसिकली लिख रहे हैं कि हमने कॉन्ट्रैक्ट में लिख दिया है कि अगर तो जैसे मोल्डिंग मशीन है और इंस्टॉलेशन सर्विस है, जब हमने कॉन्ट्रैक्ट करा उस टाइम पे भी आइडेंटिफाइड कि अलग से इंस्टॉलेशन सर्विस होगी और अलग से आपका गुड प्रोवाइड जो परचेज कर लिया हमने वो तो अलग ही हो गया. तो कॉन्ट्रैक्ट अगर एक ही वेंडर है जिससे हम दोनों ले रहे हैं कि परचेज भी कर रहे हैं और इंस्टॉल भी करा रहे हैं, तो उसमें सेपरेटली हम आइडेंटिफाई कर पाए कि उसका प्राइस इतना है उसका इतना है, तब वो सेपरेटली आइडेंटिफाइबल माना जाएगा.
No. So for example, if I am like mold provider as well as installation service provider for the molding, right? And you are, let's assume, a tire manufacturing company, and you came to me, I wanted to buy 17-inch rim size mold, along with the installation, and we entered into a you can say we negotiated both purchase sale of the mold and installation. Let's assume mold price is $100,000 and installation service cost is $10,000, and we negotiated at $80,000 as a combined deal.
Okay.
Right? Even it's a combined deal, but I have two distinct or two separate performance obligations that you need to identify. So in step 2, we are identifying how many performance obligations we have in the contract. So it can be a one contract negotiated together, which we understood earlier. But here in that contract, we need to identify how many performance obligations that seller have.
Okay. Okay. Got it. Okay.
So now if you look at the note, if the goods and service is not distinct, then combine together the goods and service with other goods and service until a distinct bundle is formed. For example, like IT support services, which we are discussing, office maintenance services, right? Like in IT support service, whether you are providing hardware support, considering software support, performance support, network issue, VPN issue. However, if added hardware support, then that is a distinct performance obligation once again. So this all comes under the same umbrella. As it
अब ये हो सकता है ना कि जब आइडेंटिफाई कर लिया कि दो सेपरेट परफॉर्मेंस ऑब्लिगेशंस हैं तो दोनों का रिकॉग्निशन का मेथड भी वेरी कर सकता है.
Yes, we are coming to that. Like for example, this mold and installation. Mold will be at point in time, but installation service may be like after 1 month or 2 months. Like for example, installation may take like 2 months time.
Right.
So the installation service will be recognized once installation is being done. For example, if you have purchased car with the extended warranty, so sale of car would be point in time, but extended warranty would be over the period of warranty time.
राइट. जैसे सर जो मेरा ये एग्जांपल था ऑर्गेनाइजेशन का, अगर मैं वो कंटिन्यू करूं तो उसमें हमारी डिजिटल लाइंस के साथ प्रोफेशनल सर्विस भी प्रोवाइड करी जाती है जिसमें वी हेल्प द कस्टमर्स इंस्टॉल दोज लाइंस एंड डिजाइन देयर सिस्टम्स अकॉर्डिंग टू दैट. तो प्रोफेशनल सर्विसेज का जो रेवेन्यू की अमाउंट है दैट इज रिकॉग्नाइज्ड फेज वाइज. फेज में इतना है, सेकंड फेज में ये हमने डिलीवर कर revenue.
Yeah. So for similar to what you said, Akash, if I say you want to set up a Domino's store, right? So through the Domino's, first time you'll be paying them all the machinery cost, right? And then they will come and do the installation of the machinery, right? Second, third, they will come and train your staff, and then after on a monthly basis or on a daily basis on every sales they will take royalty, right? That's a one franchisee agreement, right? But within that you'll see like 4 things you need to pay to the Domino's. First thing, as and when you purchase the machineries, so that Domino's will be recognizing point in time as and when they deliver the machinery, right? Second thing, when they come and do the installation, let's say after a month they come and do the installation, so once installation is done they will recognize the revenue for installation. Then third would be they will be giving you training to your staff, maybe 2 weeks training, 3 weeks training, or 4-week training, so that will be recognized over the time they finish off the training. And then after in future it will be over the period of time as and when you are selling each pizza or whatever the material you'll be selling as a royalty. So within one contract, there may be different distinct goods and services, and those distinct goods and services might be recognized in a different fashion. That will be understanding in step 5.
Okay.
So as of now in step 2, we are just understanding the performance obligation, how to identify a performance obligation, or when a performance obligation is being considered as capable of being distinct and separately identifiable. If it is not capable of being distinct, or if it is not capable of being identified separately, then how can you consider it separate? Right? That's what we are learning.
Okay.
I have a question over here.
Yes.
So if, for example, so EY is providing consulting services to a client, In that, so they have they sign an SOW and they decide a fee, right? And in that contract, there are different services which EY is supposed to provide. For example, EY will perform internal control projects, will handle those, will test their SOX compliance, right? They'll provide specialist services on IT side as well. So that is, they are different services, but the fee is a consolidated one in the contract. So in that case, will we consider it as a bundle of services because
Yes.
the fee will be provided at once? Okay.
Yes, so it will be a bundle goods and services, but in that bundle, you need to identify each performance obligation which is capable of being distinct and separately identified. For example, let's assume like EY has entered into a contract with, let's say, Amazon, right, to provide tax consultancy services, internal control testing services, as well as accounting advisory services, right? And they negotiated the entire deal for the year, let's assume $1 million, right? But at the back end, before like EY has given any quotation to them, they have done all the estimation how much time and energy of the respective category of staff, senior manager and partner would be investing in tax team, accounting team, as well as in your risk team, right? Based on that, they have done the calculation. Let's assume they have given a offer of $1.2 million and final negotiated price is, let's assume, $1 million, right? So in the same proportionate in which they have budgeted, so in same proportionate they will be recognizing the revenue, but for all the three different services would be recognized as and when those respective services are being provided to the customer. We'll be
Okay.
discussing, don't jump into the fifth step. So as of now, just stay at the second step, identification of performance obligation. So in this contract, there are three performance obligation. One is providing tax services, second is providing accounting advisory services, and third is providing risk, right? Internal control.
Right. Okay. Got it.
So far we understood the performance obligation, identification of performance obligation, when you can consider any performance obligation to be separate and distinct, and when you cannot consider them separate and distinct. Now coming to the next concept, which is material right or material option. This also we touch base in our last class, if you remember, material right and material option. Like in last class, if you remember, we discussed an example of Domino's, right? If you purchase a Domino's pizza, they will give you a coupon. On next purchase, you will get the 50% discount, right? So as you are making effort to purchase the first pizza, they are encouraging you, motivating you, and giving you the right to purchase another pizza at 50% discount. And 50% is significant in terms of value, right? Hence, this is being considered as a material right. But when they're giving material right, when you have purchased something, right? For example, I buy an HP printer and they have given me 50% discount voucher to purchase next three cartridge, right? So 50% is a significant amount for discounting for the next three cartridge. So I got a material right to purchase next three cartridge at 50% discount. So that is called material right. So if you see material right and material option, it provides right to a customer which it would not have received without entering into the contract. Right of any incremental discount. For example, if you go to the HP website or HP store, and if you want to buy the cartridge, let's assume like HP printer, you have 1200W, which I have, right? And you went and you want to buy the cartridge. So cartridge might be, let's assume, $30. Generally, they provide, let's assume, 10% discount. So if you individually go and buy, you'll get it $27, right? And on the other side, I have purchased HP printer. And now they have given me three discount voucher of 50% each to buy next three cartridge. And if I go and buy the cartridge, I get it $15 instead of $30, right? Yes, no?
Yes, sir.
So I am getting a material right over you. That means I am saving $12 more than you. Right? That is called material right, but material right has came only when you have already done some purchases, previous purchases. Right? That is what it means is. So this is the difference between discount and material right. Because material right is being considered as a separate performance obligation. For example, if you have purchased a car, and then the dealer is giving you 50% discount on the extended warranty. Let's assume you purchase a Mercedes-Benz S series for how much? $100,000, right? And you got a 50% discount if you want to buy a 3-year extended warranty. Normal price of extended warranty, let's assume, is $10,000, right? And now you are getting it at $5,000. For example, if you have not purchased the car, then if you directly went and to purchase the extended warranty, let's assume they give you 10% discount. How much is it? $9,000. Whereas now, as you have purchased the car, you are getting it 5,000. That means you are getting additional 4,000 discount, right? So it's a material right you are getting. So each material right is being considered as a separate performance obligation of the seller. That means this extended warranty is a separate performance obligation from the seller side. Make sense?
Yes, sir.
Yes,
मटेरियल
sir.
के एग्जांपल डिस्काउंट और फ्री आइटम के अलावा भी कुछ और हो सकते हैं?
No. Material right, or maybe either it's completely free or it may be significantly less value than its normal price. Then it is says you have a material right. So
Okay.
material right are distinct from discounts.
Okay.
Material right when you have significant discount or significant reduction in the price for the next purchase, and this you get because you have purchased something originally.
Okay, sir.
Anyone else have any doubt? So far so good, everyone? Okay, so if you see the theory, it provide right to a customer which it would not have received. Underline this work, which it would not have received without entering into the contract. That is the most important. Right of any incremental discount or free item. These type of options are treated as separate performance obligation with a portion of the transaction price allocated to them based on the standalone selling price. This we'll be discussing in fourth step, allocation of transaction price. Revenue is recognized when the option is exercised, actually exercised. If you are purchasing extended warranty, then only the revenue for the extended warranty is being recognized, right? So for example, like Domino's discount voucher, 50% discount on next purchase, buying of printer, and next 12 months charges will be 50% discount. Buy a laptop, get a free antivirus, right? Sometimes you'll get a free antivirus also, right? So this free antivirus is also material right because you are purchasing laptop from the dealer. Make sense? Let's do two questions. First one, which of the following would represent an option with material right offered to a customer? So out of these four, which one is represented as material right? Okay. First one, an offer to accept a return product for a full refund that is offered to all customers. Would it be considered as material right?
No, sir.
No, sir.
Why?
Is offered to all the customers and it's general in nature, not given specifically to one particular customer.
Absolutely true. Second is the coupon offering 20% off the next purchase that is given to all customer. Is it material right?
Same as the,
Same,
yes.
right? So no. Third option is a coupon offering 50% off of a customer's next purchase if the customer spend over a specified amount, with the customer not spending that amount getting no such voucher. For example, let's say if you go to like these days, like like when season is not off, like for when you go for a off-season shopping or non-off-season shopping. In non-off-season shopping, generally, like company like Allen Solly or maybe Aero or maybe any other brand which you like, you go for a shopping, they give you, like if you purchase more than, let's say, $1,000, they'll give you 10% discount. If you purchase more than $3,000, they'll give you 20% discount. And if you purchase more than $5,000, they give you 25% discount. That's what it means, is a coupon offering 50% off a consumer's next purchase if the consumer spend over a specified amount, with the customer not spending over that amount. So this is again a journal offer, right? It is being available to everyone who can spend that amount. Make sense?
Yes,
Or
sir.
any doubt here?
इसमें सर ये भी तो हो जाएगा ना कि मतलब मटेरियल राइट तभी होता ना जबकि पक्का हो जाता कि हाँ he will get that thing. Here maybe he has to spend certain amount, only after that he will get that offer. So
Yes, this is just an offer.
yes, correct.
This is not
It's
a right.
right.
Right. Fourth point is a coupon offering 50% off of a consumer next purchase if the customer spend over a specified amount, with the customer not spending over that amount getting no such voucher. Oh, that's a
It is the
surprise.
same, sir.
Okay, so there might be a typo error. 1 second. 1 second. Oh, this. Just give me a second. My bad. Sorry. So third option is an online advertisement that highlight an upcoming holiday sale. Sorry, my bad. Huh?
फिर तो हमने गलत डिस्कस कर लिया तो
Yeah, we
अभी कर
interpreted.
दिया हमने ऑफर
Yeah, we interpreted it wrong. Sorry, my bad. So the fourth option is right, because if somebody is purchasing that much amount, then he or she is being eligible to get additional 50% discount on future sales. So that's the material right is on purchase of specific amount, more than specific, right? Sorry about that. Cool. Next question. The seller of goods has satisfied its performance obligation when? So when it is called a performance obligation is satisfied. First one is the seller still has a legal title of the goods, right? If seller still has the legal title, that means he has not transferred the legal title. So legal title is not transferred, that means ownership is not transferred. So that means performance obligation is not satisfied, right? Second option is the seller still has significant risk and reward related to the ownership of goods and services. Then also, like, the performance obligation is satisfied or not satisfied?
Not satisfied.
Not satisfied. Third one is the seller has received payment for the goods. So he has received the payment for the good. Would it mean he has satisfied the performance obligation?
No.
Right? So last one is the seller has transferred the physical possession of the goods. Right? As there are no other facts, so we are assuming the physical possession is being transferred. That means ownership has been transferred, risk and reward has been transferred. Hence, we can say this is the best option out of these four. Right? Sometime you need to select the best right option. Make sense?
Yes, sir.
Okay. So any doubt on step 2? So we are done with step 2 also, which is performance obligation, identification of performance obligation. Shall we jump into step 3?
Yes, sir.
Okay, so step 3 is determining the transaction price. So determining the transaction price. What is transaction price? Is the value, is the money, is the amount, is the dollar, right? So transaction price is the amount of consideration to which an entity expect to be entitled in exchange for transferring the promised goods or services to the customer, minus, excluding means minus the amount collected on behalf of third party. For example, if you have collected any sale tax, right? So generally, if you have seen like any invoice, let's say you have invoice of $10,000 to supply any goods to any consumer. On that $10,000, you might be charging sales tax. Let's assume 6% is your sale tax. How much is the total value of invoice? $10,600, right? But what is your revenue? What is the transaction price? The transaction price is 10,600 minus 600. That's what it means. Make sense?
Yes, sir.
Yes, sir.
An entity should consider the term of the contract and its customary business practice to determine the transaction price. So here, what is the most important thing is the term of the contract, and if there is any business practices which is prevalent in that industry, then those business practices also the entity need to be considered to identify the transaction price. The consideration promised in a contract with the customer may include fixed amount, variable amount, or both. So we'll be discussing what is fixed amount, what is variable amount, and what are the factors could be there. So that is all part of step 3. So in step 3, we'll be understanding the transaction price. So transaction price include variable consideration, net of constraint to variable consideration, and then significant financing option if there is any, and then if there is any amount paid and payable to the customer as a barter, right? So all those things would be considered in the transaction price. We'll be understanding one by one each step about those, right? First, next thing, if you look at the note over here, transaction price does not include estimate of consideration from future exercise of option for additional goods or services from the future change order. So as of now, what is order in your hand? That you can evaluate only, but in expectation of future order, you cannot recognize the revenue in the current time, right? You may have like an agreement with the customer for supply of so many goods and services over the period of time, but customer will be giving you purchase order for the respective goods and services on a need basis. So you'll be recognizing the revenue for those purchase order which you have received rather than the entire budgeted amount, or in future you are expecting certain change in price, change in quantity, or change in scope, right? So revenue will never be recognized based on any estimated future change. It should always be based on the current orders in hand. Make sense?
Yes, sir.
Oh boys, are you here?
सर
Okay.
लग रहा है
Hmm?
2 3 4 4 जने हैं, राहुल, आयुष, आकाश, एक और है.
Avneet, Gurmeher, Ananya, Pulak, Prashant, Rajiv. Okay, next topic is change in transaction price. Entity should assess the change in transaction price at end of each reporting period or upon contract modification. So there's two times when as an entity we need to assess about change in transaction price. When first one is if there is any modification in contract. What is the modification of contract? Change in price, change in scope, or
Both.
both, right?
Yeah.
If there is any change in price, change in scope, or both, and contract is getting modified, at that point of time you need to revisit and re-evaluate what is the total transaction price. Second thing is at the each period and when you are closing your financial statement. right? So it's been your responsibility to assess the change in transaction price at 2 times. One is if there is any modification in the contract at the time of modification, if there is no modification that at the period end, right? Entity should account for change in the transaction price by allocating the change to the performance obligation in the contract on the same basis as at contract inception. So whenever there is any change, you need to evaluate from the scratch as a fresh contract, and you should consider all those changes as a new contract, right? And then evaluate how many performance obligations are there and what are the total transaction price. Amount allocated to satisfy the performance obligation should be recognized as revenue or as a reduction in the revenue in the period in which transaction price change. So whenever there is change in transaction price, you need to evaluate that and consider the impact of the same in your revenue recognition or in your total transaction price.
इसका कोई एक बार प्रैक्टिकल एग्जांपल देंगे,
Yes.
क्योंकि मेरे को जो पता है मेरी ऑर्गेनाइजेशन में क्या होता है, अगर कोई कॉन्ट्रैक्ट मॉडिफाई हो रहा है तो पर से ऐसे नहीं होता कि हम परफॉर्मेंस ऑब्लिगेशन में कुछ चेंज कर रहे हैं, बस जो मंथ एंड पे इनवॉइसेस होते हैं उसकी वैल्यूज चेंज हो जाती है, नथिंग
Yes, yes. Performance there may be, like contract modification. If you remember, there are two type of modification, right? One is just changing the price. For example, let's assume you are providing the lease lines rental, right? As of now, let's assume you are charging $1 for each lease line, right? And in future, your price has increased to $1.10. So only the price will change. But when there is a change, you need to look at whether there is a change in only price, there is change in scope, or there is change in scope and price. So at the time of modification, you need to do a relook. If there is no, then it's okay. If there is, then you need to consider. Make sense?
Yes, sir.
Now coming to the key consideration to determine the transaction price. Maybe we can take a break over here because this is a bigger topic. We may not be able to finish in the next few minutes. So it's 11:30. We can take a break and come back at 12, and then we'll start from this key consideration to determine the transaction price. Sounds good?
Okay,
Yes, sir.
sir. None.
Yes, sir.
Okay. So let's come back at 12 and we'll start from this major topic.
Okay. None. Thank you.